Welcome back to Equity Matrix. Today we want to discuss what's happening in the markets. Today's one of them days, and the last week is a reminder that it's not the stock you buy which is a primary thing, it's also the price you buy, because you can buy a very crap stock business at a great price and get a great return, but you can also buy a fantastic, wonderful business or stock and get a poor return. This is where the deeper analysis on the valuations and the price and the technicals of where you're buying a company. Now, you do need to know and pay attention a little bit to the politics that's happening around us. We was always conscious and aware that the Trump tariffs were coming. Now, we have been shocked by tariffs that Trump is recommending a lot worse than we all expected. Now there's a lot of uncertainty. I just heard somebody on the road, just a random person, talking about the price of their Nintendo Switch that is coming out soon is due to be going up. So it means they may hold back on their purchase, or they may buy it now. They're not sure what's happening. There's a lot of uncertainty from customers to businesses to CEOs to shareholders, investors, even traders right now are unsure of what is going on in the markets. But again, it brings us back to that Warren Buffett, stay within your circle of competence, buy the companies that you understand, and also having that margin of safety. So for all you out there who bought these stocks at highs, 1%, 2% from the highs, that was a big mistake. You never go all in on the highs when you're purchasing a stock. Now, if you purchased a great business, a wonderful company, then in the long run, and you're talking a pure investment, no leverage, then you can hold out for the long term. You will do well if you held one of the top companies. If you held one of these meme type stocks, meme type cryptos, then today will test your strength and test your resolve into how much you believe in them companies. Are you willing to hold 5 to 10 years in these so-called stocks and companies that you've got? Because in this game, holding for the long term is the ultimate tool that is on your side, is to be able to hold on for dear life when these particular situations happen, and you can deploy some dry powder once you start seeing valuations that are attractive to yourself. Now, with all this uncertainty, it is feeling like when do I put in my money? How should I put in my money? As I've always said, you always want a dollar cost average. Put in a set amount at a set time, once a week, once a month, or a lump sum once a quarter. That way you buy a bit at the highs, you buy a bit at the lows, you buy a bit in the middle, and it will average out your buy price, making your long-term returns a lot better. So what are we expecting moving forward in these markets? Well, to be honest, the tariffs turned out a lot worse than expected. There's some dates coming up like the 5th, the 9th, And if Trump holds his ground, which it looks like he's due to and willing to, there could be a lot more madness. Looking at the technicals on the S&P 500 VOO, it broke the 496 level that I said if we break, there's a lot more downside. Once that happened, we've seen 3-5% drop-offs in VOO, S&P 500, the QQQ, the Nasdaq 100, Apple, Microsoft, Amazon, Nvidia, Tesla. They've all sold off. You're starting to see even a drop down on some of the healthcare companies, Eli Lilly, and even strong stocks in that I personally like, are, even Costco is starting to see some pullback. So hold on, as it dollar cost average, if you're trading, is now a tradable bottom. I can't see it right yet. I can't see it at the moment, so we've got to wait and see. Stay tuned, stay updated to equity finance, equity matrix, and take your time and stay cautious.